Good afternoon. This is Ken Long from Tortoise Capital with a review of the weekend trading report for November 6, 2015. We have a bullish normal condition market. On an annual basis using weekly RSI 14, we are at neutral with a score of 59 out of 100. Using the 10-day NDX for the shorter term market condition, we are at the higher end of neutral at 72 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average is just into the bullish at region at 2.53% above the 200-day, so we're a 0.5% into bull. Slope of the 50-day moving average is green bullish at 0.88%. That's very strong. ADX 14 is a strong upward trend at a score of 26.9. The risk index is the 30-period moving average of the VIX divided by the 10-period. The boundary between risk on and risk off is 1.0. That reading today is 1.15, so we're well into risk on. Take that score, look at the last 5,000 trading days, find the average and standard deviation to compute the risk C. That comes in a score of 1.68. You can see a 90-day histogram of that indicator, and so that tells us to have a long side bias, to make sure that our swing trades are measured in terms of their risk and their stops, and that we're preserving profits because it's already declining from an almost 3 plus z-score. If this were to go below the red line, or green line, it would go into the red, and then that would be an indication to switch to short side trading. So we are cautiously optimistic about the upside here on the basis of that reading. You can see the blended monthly rebalancing holdings. That reading for next reevaluation should read 1 December. My bad, my typo. You can see the leading candidates in the ETF 13, 22, and 32 portfolios. Notice that the U.S. is strong across the board. It is large caps receiving all of the discretionary money here. And then the leaders in the Dow 30 and ETF 200 and the ETF Max. Sugar is involved in that too. ETF 2 theoretical exposure is at 60%. The model portfolio is at 60%. No changes there. In the ETF 13 and 32, I just want you to notice how dominant the U.S. large caps are. Technology, the diamonds, spiders, U.S. real estate, small caps, then large caps, and treasuries, followed by all of the globals. And it's the globals where the weakness is, especially in Latin America. ETF 32, it's the same, but notice technology and consumer discretionary are the strength areas. Those are the large cap techs that are doing very well, especially the semiconductors, Intel, Nvidia especially, Microsoft dominating. Only IBM is lagging there. And then the consumer discretionary, that's a flight to quality and conservative exposure to equity markets in the form of U.S. large caps that earn money. Brazil at the bottom of the stack in the cash position. ETF Max, the ones that are interesting is the sell-off in sugar after a 50% gain in the last month. I want you to look at XSD, the semiconductor index is a tremendous relative strength leader, very well postured. So you've got a lot of technology and financials here at the top of the ETF Max stack, looking for follow-through momentum there. In the S&P 500, Nvidia, Amazon, Cablevision, all things to be especially concentrated on. I really like Nvidia. I'm prepared for the short-term pullback, but on any kind of new momentum, I like Nvidia and then Amazon especially. Market health check, you can see we've recovered all the way out of the depths up to the all-time high. A couple 3 days of pullback, resting at the edge of the river. The 10-period regression line and 30-period regression line are steeply up, dragging us at the edge of the river. The river is shaping up. If this fails, it's back to the Bollinger Band mean in the middle of the river at 203. If it breaks out above this all-time high, then another $5 move is available to the upside with a target $5 to $8, so a target of about 220. The percent price oscillator jaws have closed, so we've had a really nice run here, so that's why I'm cautious about this position. This is actually a critical state in the market. You can make an equally strong argument for a large move up through the purple line and beyond, led by tech and finance, or a retracement to preserve profit and pulls back to the edge of the 200 to retest. So this is a critical state. Start with your intraday trade and then let that grow into swing trades. Be cautious about starting new swing trades here, but breakouts to all-time new highs are going to be still feasible here. 6 out of the 10 regional ETFs are on buy signals, so it's 60-40 again. U.S. is stronger than the globals, and then inside the U.S. it's tech, large caps, small caps, and mid caps. Two strongest in the world are S&P and tech. Two weakest Latin America and Asia less Japan. See the current strength right now in technology and consumer discretionary. Finance is a close third. In the world market model, everything in the U.S. is above average. The Dow and the NASDAQ 100 are both exceptionally strong. Everything Asia is weak except for South Korea, China, and Vietnam. Latin America very weak, emerging markets weak. All of the alternative assets are strong here in gold, silver, treasuries, despite that harsh pullback in gold and silver, which sets up a very nice buy on value, by the way. In the business sectors, technology strength is reflected worldwide and the U.S., as is consumer discretion. Everything Europe below average. Only Belgium and Austria slightly above average. ETF top 30. It's technology and financials. In the Dow 30, the new member of the gang here is DuPont, which has an outstanding performance, green and white. Nike, Microsoft, McDonald's looking pretty good. Only IBM and Walmart are in the red. I want you to notice more than half of the Dow are among the upper candidates across, even compared to the ETFs. That's how strong the U.S. large cap move has been. That's why I expect more money to come in as equity money is looking for a place to park. That's a good place in the conservative large cap stocks in the U.S. On the daily trading plan, no new signals in channeling and overreaction. Volatility is down here in the almost into quiet. You can see ADX has risen with the bulls in charge. Handful of dojis in Dow. Some triple screens and a 551W with Cisco. I'm looking for continued strength in JP Morgan, Goldman Sachs, the Dow, and Disney. Inside the ETFs, you can see the opportunity here in gold and silver. The VIX has been suffering strength in financials and the small caps, weakness in utilities and real estate. Handful of dojis. Consumer staples look really interesting. Channeling, overreaction, 5-day down, 2.2 to 1 on the auto framer, and with a RSI2 value of just about 3. Auto framer and regression line fractal framework, UNH, is something that we look a lot at this weekend as an example of a very tradable trade frame. Daily squeezes. We like Apple, Monsanto, Google, and XLV as a trade frames there. We'll buy the breakout. You can see just how strong this move has been, and just now the slope of the 30 regression line has come back to its 10-day to close that last little run. So it's been a nice run. That's why we call it a critical state. There's an opportunity for a strong move in either direction. I favor the upside. And that's everything we want to cover. Keep your risk measured and your powder dry. I'm going to post some trade frames that we worked on in our workshop session today. I'm going to post that in the chat room for members. And so we bid you farewell from Raleigh, Durham, and a shout out from all the traders here that have been working really hard this weekend. And keep your risk measured and your powder dry. And we'll see you in the chat room as we get our live trade on tomorrow. Take good care.